Information shared on the following program is for general information purposes only. It does not constitute legal, tax, investment, or other advice, nor is it intended to recommend any particular investments, products, or financial instruments. Always seek advice from your financial advisor, attorney, or accountant with regard to investment, legal, or tax questions.
Hey, you guys ever heard of this Baitcoin?
Yeah. You thinking about investing in it?
I sure am.
You don't know anything about Baitcoin. Why don't you just play it safe?
Hey, with the price of Baitcoin skyrocketing, I don't want to miss out. Ooh, look, a worm.
Welcome to the only show in the country dedicated to helping savers worry less about money, the Worry-Free Retirement, with your host, best-selling author and fiduciary, Tony Walker.
Years ago, following the conclusion of an educational workshop I was hosting up in southern Indiana, an elderly gentleman approached me and asked if I could take a quick look at his investments. As I scanned over the scratch piece of paper containing all of his assets and investments, I noticed approximately $500,000 invested in one tech stock, with the rest of his assets, about another $500,000, sitting in a bank checking account, which seemed odd to me as an odd mix of investments. One was very techy and full of risk, and the other a very low-yield bank checking account. Not sure what to make of these two diametrically opposed investments, I asked him whether he considered himself an investor or a saver, to which he responded very quickly, "Oh, most definitely, I'm an investor." I then asked why an investor such as himself would have so much money sitting in the bank earning next to nothing in interest, to which he replied, "Because I just sold all my gold." "Well, why did you sell all your gold?" I asked. "Because," he quickly responded, "everyone was buying it." Well, welcome folks to the Worry-Free Retirement, and yes, I am your safe money specialist and fishing fiduciary, Tony Walker, and today we'll be talking about why the financial world so easily lures savers away from the safety and security of the financial pier and into the world of peer pressure by promising us savers much higher returns. But before we swim off into these uncharted financial waters of risk and uncertainty, let me introduce an extraordinary swimmer and fisherman himself, America's favorite financial sidekick, Mr. Aaron Orander, along with his personal lifeguard at the technical helm, Mr. Derek Hudson. Okay, just for a minute, pretend you're a fish. What is the safest location for you and your buddies to hang out and still get a little food now and then? Well, if you guessed the pier, you would be correct. Of course, I'm not a fish, nor really know much about fishing, but it would seem logical that if you and your buddies are swimming underneath the pier, you are less likely to take the bait of all those fishermen out there trying to lure you into their hooks. But since you're a fish and probably getting tired of eating the same old scraps being tossed to you from the pier, it would be very tempting indeed to venture away from the pier to chase new shiny objects, especially if every other fish was doing it. I mean, who wants to miss out on a delectable piece of bait, right? Now, just like any curious fish not wanting to miss out on some cool new stuff, we humans can fall into the same trap, and it's called the fear of missing out, or FOMO for short. And for the next 2 weeks, we're going to try to learn why savers are today more tempted than ever to leave the safety and security of their financial pier and venture out into the uncharted waters of risk and uncertainty, and yes, even speculating with their money. So stay tuned, because when I return, I'm going to share with you the secret to avoiding the bait of speculation and why playing it safe with a written game plan is the safest bait of all. I'm Tony Walker. I'll be right back. Wondering how much money you'll need to retire? Probably a lot less than you think. I'm retirement specialist Tony Walker, and for the past 36 years, I've helped thousands of savers determine when to retire and how much money they'll need in retirement, and I can help you too. To meet in person at no cost or obligation, let me invite you to log on right now to TonyWalkerFinancial.com or call the toll-free number on your screen. We look forward to talking with you soon. Welcome back to the Worry-Free Retirement, and our Live Well, Die Broke moment actually comes to us from our own Gina Tutwiler. This is her father, Mr. Bill Munsterman, and I think that's a smallmouth bass if my fish dictionary is correct. Looks like a pretty fish there. And if you're one of those folks out there that would like to submit your picture for a chance to win a $100 gift card, we have a drawing once a month. You just want to send it to Gina at TonyWalkerFinancial.com. That's Gina at TonyWalkerFinancial.com. And no, Gina, your father doesn't get a chance at this drawing. Okay, speaking of fish and leaving the safety of the pier, one of my favorite books as a kid was this little fella, Artie the Smarty. Now, the premise of the book was this. Artie was never going to be satisfied with the status quo, and he was going to do his best to do what he wanted to do. Artie had big goals and big dreams, and throughout the book was willing to go against the grain, or the herd as I like to say, to reach them. So, keeping in line with the whole fish theme, we came up with this really cool little graphic to help explain the concern I have of savers falling victim to what we call FOMO, and possibly being lured away from the safety and security of the pier and into what we call peer pressure of swimming in these uncharted waters. Now, let's take a look at how we would set this up. Here are the various products and strategies that we feel should stay within the pier. And if you think about these fish swimming under this pier, they're in pretty safe territory. And we might invest in things like CDs. Of course, we could have all kinds of things, dividend participating whole life, government bonds would fill in there, annuities, particularly what we call fixed interest annuities, fixed indexed annuities would go under this pier. But there's more to it than just products, folks. There is also something we provide our clients free of charge called a written game plan. This written game plan allows us to stay the course and not necessarily drift out into these uncharted waters. And then something we'll be talking about in a minute in more detail is something called diversification. You see, the problem with investing in the stock market, and we don't have a problem investing some of our clients' money in the stock market, but if you start putting everything in one stock or go after one cryptocurrency or whatever you're thinking about, you do increase the likelihood of more risk. So we like the idea of diversification. Now, assuming you're one of those savers who is getting really frustrated with earning next to nothing on your money over at the local bank, or maybe you're that saver who has a bunch of money in their stock market right now via their 401k plan, you might be interested to know of a new currency that over the past 10 years is really making waves in the investment world, and it's called Bitcoin, otherwise known as a cryptocurrency. And with Bitcoin, and yes, even the stock market being at an all-time high, human nature always begs the question, is it too late to jump in and take the bait? In other words, should I FOMO into these uncharted waters and take a risk, or stay where I am under the safety and security of my investments and where they are? Well, since we don't know the future, we can certainly look at the past and how FOMO can strike you at any time. This is a beautiful vase of tulips, compliments of my Louisville office manager, Gina Tutwiler. Not sure what she paid for these, and as lovely as these tulips are, I think it's safe to say I wouldn't consider tulips to be a great investment. Well, guess what? Back in 1636, over in Holland of all places, FOMO was in. That's because contract prices for tulip bulbs were going through the roof. That's right. People were investing their life savings in tulip bulbs because of why? The fear of missing out. They didn't want to miss out on the huge gains that they saw others making on these tulips. In fact, to this day, we refer to this event of greedy savers chasing after all these returns, tulip mania. But since there is no real value in tulips, the expected did happen. Just one short year after a spike in the value of these tulip bulbs, 1637, there you go, it crashed. And while history may not always repeat itself, as Mark Twain once noted, it does often rhyme. Take a look at the dot-com bubble. This was back in the 90s because I remember it well. I was managing money, and during this time, all you had to do was start throwing money at these dot-com stocks, and you were a winner. That is, until it all came crashing down as well. More recent news, GameStop. Now, assuming you had purchased GameStop a few months ago, right before it peaked, you could have been a gajillionaire. That is, if you got out at the right time before it crashed as well. So what are savers to do? With interest rates at these all-time lows, or maybe you're one of the lucky few who've got all this money in the stock market in your 401k and it's increased in value, as we record this show anyway, do you go for broke and let it ride, or do you start playing it safe? Well, when I return, we will take a look at our philosophy and how we at Tony Walker Financial can keep you from falling victim to FOMO. Good stuff coming your way. You stay tuned. I'll be right back. Have you recently retired, been laid off, or offered a pension buyout? Has the company you work for moved, been acquired, or closed its doors forever? And finally, do you have a 401k with a previous employer you'd like to move to safer territory? Then take advantage of this opportunity to move your 401k or lump sum pension to Tony Walker Financial. Let's meet in person to discuss your retirement options. Log on now to TonyWalkerFinancial.com to schedule your free, no obligation appointment. Let us help you today.
Tired of the financial world chasing after your money? Dinner, seminar invitations, annoying pop-up ads on your computer from out-of-state advisors? It all adds up to confusion. There is a better way. Meet in person with nationally recognized retirement specialist Tony Walker. Tony's personal one-on-one approach has helped thousands of savers worry less about money, and best of all, Tony's right in our own backyard. Don't leave your retirement to chance. Make the short drive to meet in person with Tony now. To get started, simply log on to TonyWalkerFinancial.com.
One of my favorite books as a child was Artie the Smarty. Believe it or not, this book eventually led me to writing this book. I called it Don't Follow the Herd. And for the next 10 people, by the way, who go to Tony Walker Financial and type in the search bar giveaways or this particular link, I'll send you a free autographed copy of Don't Follow the Herd. Just thought I'd throw that in for you. Okay, let's take a look at the graphic again that we have constructed for our Pier protection. And when I think of protection, I like to think of structure. Just like fish hanging out under the structure of a pier, we too, us savers, need structure around our money. Structure provides the fish safety and security, and it does for us as well. The idea of someone tossing out bait for us to latch onto is really nothing new. So the job of a fisherman is, and always has been, to lure us out from the safe places and into uncharted waters so that he can try to catch us. And with more and more savers worried about the future, I'm seeing a growing trend of savers willing to speculate and leave the structure of their financial pier to venture out into areas of the unknown. So how do we at Tony Walker Financial keep that from happening, especially with the investments we place through Charles Schwab? Well, it's called Diversification, and here to help us, come on in, is my favorite nephew, Mr. Wes Walker. How you doing this morning?
Doing well, Tony. How are you?
I've been so excited to have you on. You've been working hard, and tell us a little bit about the project you've been on with Riskalyze and the purpose of this software that we're introducing.
Well, sure. So we've gotten this new software. It's called Riskalyze. The idea behind it is to really maximize diversification among our clients' accounts. So like you said, diversification is really just spreading your asset risk among different investments to make sure that you're not too risky or too involved in one investment or another. So that's one part of the software, and the other part of the software does what we call rebalancing, where if one security that a client has takes off and does really well, we can sell that security to go buy other parts of the portfolio to get it back in balance.
Gotcha. So I tell you what we'll do, Wes. Now, you're getting very good with this Riskalyze software, so we're going to choose our moderate portfolio. Of course, folks, we have 5 portfolios, but let's take a look at our moderate right now and just kind of look and see what might happen. So describe each of these levels and the percentages we've got in these particular investments.
Sure. So the moderate portfolio is designed to be a little bit less risky than kind of our moderate growth or our aggressive portfolios. So we do use a lot of what's called fixed income. An example of that would be these short-term treasury bonds. 30% of the portfolio is made up there. About 20% is in the actual S&P index. So on
the stock market.
Right.
Yeah.
When you hear on the news people talking about the S&P, that index makes up about 20% of this portfolio. We've got about 15.5% in what's called a dividend ETF. So that's kind of your bigger companies, dividend-paying companies.
The blue chip kind of stock.
Blue chips, exactly.
Yeah.
And then again, some short-term treasuries, 16.5% there. And lastly, some investment-grade corporate bonds. So when those big blue chip companies issue corporate debt, they sell their bonds. That's what we're investing in for that 15%. And then keep a little bit in cash too.
So this had a risk score, if you can put that up, Derek, of I think this was, 34. So that's what the software helped us determine for our investments. We select all these, and 34. So let's kind of fast forward. We've had a nice little bull run as we record this show today. Let's look at the next screen and kind of what's happened and the idea of being out of balance. Describe what's happened here.
Sure. So in this case, the short-term treasuries, our fixed income portion of these portfolios, have not really done as well as the stock market has. So the S&P has run up. You can see in this, it's up to 27% where it was at 20. And again, that dividend ETF, it was only at 15.5% to begin with, and now it's run all the way up to 20%.
Yeah,
so portfolios out of balance.
Let me clarify. What we're saying here, folks, is the piece of the pie, so to speak, it's gotten larger in stocks, it's out of balance, and that's pushed the bonds lower. So now what would we do to correct that, and how has that affected the risk score?
Well, so to get this portfolio back in balance, what we would have to do is sell off some of our positions in the S&P index fund, some of our positions in the dividend ETF, and go buy those other positions that have fallen to where they're lower than they should be.
So to get that risk score back to 34, that's what we're talking about, to get less risk.
Right.
Now, what's interesting with this phenomenon, before we go to the next screen, Derek, most people, especially I've noticed this with a lot of our saver clients, we have, over 1,500 people now in this Schwab program, but they're pretty excited. I mean, the markets have done well. They're like, hey, Tony, this is cool. And then we're talking to them, well, we got to rebalance. And human nature says, well, I don't want to take any of those winnings off the table. I'm making money, right?
Right.
So, and these next few slides we're going to show are really interesting. So what we're going to do, folks, we're going to imagine the bull market and what would our portfolio have done even when it's not rebalanced. And then we're going to show the downturn back in 08 and what happened there. So go ahead, let's go to the next slide, Derek, and explain this, Wes.
Sure. So this top line here kind of illustrates what would be similar to a 2013 bull market where we were really seeing a rise in equities. This IRA moderate portfolio, our original portfolio with a 34 risk score, would have done about 9.5%. If it had gotten kind of unbalanced to where those equity side of things had grown up, with risk score 41, it would have gone up about 13%.
Okay, so folks, here's the thing. Wes, a lot of people might say, well, don't change it now, the market's going up. And in fact, if we go out here and we look at the S&P 500, again, FOMO might come in. You might say, oh, Tony, man, why did you have me at moderate? We should have been over here risking all this money. Look how much return there's been. So again, explain now what can happen if we don't rebalance. Let's imagine back in 08 again, if we have another 08 crisis, let's go in and see what happens.
Right, so the inverse of those big gains is if it can go up that high, it can go down just as quick. If we're in our normal IRA moderate portfolio, and again, these aren't numbers in stone, but if we had kind of that similar situation of the financial crisis, that portfolio would have gone down about 15.4%. If it was unbalanced, if we hadn't been taking a look at those holdings and trimming the winners back and buying the losers up, we would have lost about 21.4%. So bigger loss there. And if we were in the real big ticket item, the S&P 500 index, we could have lost about half, 53.1%.
That's wild. And then as you're moving through this, one of the things we've noticed is we've been doing a lot of this by hand. So Heather Hughes, who's in our Bowling Green office, and fellow fiduciaries, right now we're going to implement this as we record this show on March 31st, 2021. This will be for what we call our qualified accounts. So explain the importance of doing this for qualified and actually how it's a lot easier from a tax standpoint versus if we start doing rebalancing on non-qualified and why people need to really be careful there.
Sure. Well, in a non-qualified account, such as a taxable
after tax, right.
Taxable brokerage account, your average just brokerage. The problem with rebalancing often is you're going to create some taxes. So if you sell off positions that have done well, of course, you're going to have to pay capital gains taxes on those. And the inverse is true if you have what's called a qualified account, an IRA, a 401k, Roth IRA. All of those things, if you sell those positions, there's no taxes to be paid. It's only when distributions come out that you have to be taxed on them. So it's really a good thing to be doing this in these qualified accounts, but you have to keep an eye on things if you do it in non-qualifieds.
Yeah, so folks, if you're sitting there right now and you got a 401k or an IRA, and maybe you want to roll one over, or maybe you got a non-qualified account that's not being monitored and you want somebody like us to watch over that a little more closely, not only for the diversification, but the tax planning, this would be a great time right now to go to TonyWalkerFinancial.com. In fact, let's go there right now, full screen, Aaron. So at TonyWalkerFinancial.com, if you would like to go through an analysis of your situation, all you got to do is click on that Let's Get Started button. Now, once there, here's what's going to happen. Your information is going to go confidentially to our Bowling Green offices. You will be contacted by one of our in-house service experts, and we'll either schedule a phone call with you, or if it warrants, we'll be happy to meet with you in person at our Bowling Green office or our Louisville office or Lexington, Kentucky offices, whatever's convenient for you. And best of all, there's never a cost or obligation. So TonyWalkerFinancial.com, or feel free to give us a call at the toll-free number on your screen. Wes, we appreciate this so much and look forward to all the wonderful things you're doing at Tony Walker Financial and getting ready to implement this as we speak. So in the meantime, you make it a good day, and thanks for being on the show with us.
Will do. Thanks for having me.
You're welcome. One of the most frequent questions I'm asked is this: Tony, when can I retire? It's a great question and one that many advisors are afraid to tackle. Why? I think it's because most advisors do not truly understand retirement planning and how and why a written game plan is the key to being worry-free after you decide to retire. I know this to be true based on all of the daily interviews I conduct with savers who are retired or nearing retirement and simply need help in making sure they can retire worry-free. My personal experience in meeting with over 15,000 savers has allowed me the ability and expertise to quickly determine for that saver if he or she can retire, and if so, when. Sadly, many people who do retire with no written game plan and no full service team of local retirement specialists to assist them do later on begin to worry. We know what you can expect in retirement, and we know how much you should have saved based on your particular needs and goals. Our proprietary software, coupled with a well-trained staff, will give you the confidence you need in deciding to retire and when to begin using and enjoying this money that you've worked so hard to save. We're a little unusual at Tony Walker Financial because besides myself, we offer 3 highly trained service fiduciaries who do not work on a commission basis, but are paid a salary to be there to service what I sell. It's an unusual arrangement, but one I think you'll find to be in your best interest. You'll know that you have competent advice along the way, not only when you retire, but long into retirement. So if you are retired, thinking of retiring, or know of someone who isn't sure about how to go about retiring, why don't you log on right now to TonyWalkerFinancial.com or call the toll-free number on your screen. We look forward to helping you enjoy a worry-free retirement, and as always, we're happy to meet or talk to you about your situation at no cost or obligation. With the stock market at all-time highs and our nation's debt through the roof, there's a lot of uncertainty out there. Now may be the best time to safeguard more of your 401k. Let's get started today by logging on to TonyWalkerFinancial.com. Today, and maybe for the first time, some of you have learned about a brand new currency called fiat currency or cryptocurrency, and how over the past few years, if you would have left the safety and security of your financial pier and ventured out into these uncharted waters of cryptocurrency, quite frankly, you could now be a gajillionaire. So assuming you just missed out on the huge spike in gains of crypto, and yes, missed out on a stock market that has, as of the date of this recording, at all-time highs, you may be asking yourself, is now, Tony, the time to FOMO in? In other words, should I invest in Bitcoin or some other cryptocurrency, or should I be throwing my money back into the stock market? Or should I just hope and pray that all this government printing of money doesn't devalue my current money down to nothing? Well, guess what, folks? Whether you risk your money in cryptocurrency or watch your money dwindle as a result of the inflation that the printing press is creating, you and I have one thing in common. We all must depend on others to sustain us. And it all boils down to this. In the end, do we place our trust in man to sustain us or in God? You know, with man, there's always a cost or risk to that choice. With God, He's always there and provides for our very souls everything we need at no cost. In fact, with God, His provisions for us are free, and it's called grace. And unlike the limited supply of money offered up by the financial world, God's grace is actually unlimited. Of this choice of leaving the pier of safety and security of God's free grace and swimming out and depending on the uncharted waters of man's latest bait, the great writer Charles Spurgeon says this: "We are all poor pensioners, dependent on either man or God, and only we can choose which one we will follow." My question is, with all of the uncertainty and limited supply of money to go around, why would we not choose the unlimited supply of God's free grace? But Tony, how can you say this grace offered to me by God is free? Well, let's take a look at Romans 5:15, where it says, "But the free gift is not like the transgression," of course being the fall of Adam and us as well. "For if by the transgression of the one," that's Adam, "the many died," that's us, "much more did the grace of God and the gift by the grace of the one man, Jesus Christ, abound to the many." In other words, my friend, God's grace will sustain you. So my advice, choose well. So what about you right now? Are you that safer that's out there suffering from FOMO and wondering if now's the time to leave the safety and security of your financial pier and instead FOMO in to peer pressure by venturing into these uncharted waters of risky investments? Or maybe you are that saver who has enjoyed a nice ride in the stock market and wondering if now is the time to abandon ship. Well, here's the question you need to be asking yourself right now. Why in the world would you take all that risk with your money when you don't have to? You see, the key to a worry-free retirement is not found in peer pressure, that is, chasing after the latest shiny object that everyone else is investing in, but rather it is found in staying the course by playing it safe with products and a written game plan that clearly lays out for you how best to spend and enjoy this money and without the fear of running out of it. There is a better way to manage your money, and it's called the worry-free retirement. And best of all, the free gift I'm offering you today is to meet and let us show you how it works. All you need to do to take advantage of this free offer is log on right now to TonyWalkerFinancial.com, and then when you get there, just simply click on that Let's Get Started button. While there, you'll be given an option to meet by phone or in person at one of our convenient locations in either Bowling Green, Louisville, or Lexington, Kentucky offices. Or better yet, feel free to call us right now at the toll-free number on your screen. Well, next week, I'm going to share with you something I've never shared with you before, and that's how I personally have created for myself and my family a very safe and simple game plan that most advisors, most financial entertainers, and certainly most speculators would never dream of understanding and how to come up with this. It's a wonderful plan for savers, a thing of beauty that I'm going to reveal to you next week. But you remember, between now and then, if all else fails, you be worry-free. Make it a good one.